Hey guys, welcome back to the channel. Today I wanted to do something different and just share with you guys 3 dividend growth stocks that I do believe have a lot of upside potential. So let's just get into it. I do not want to waste your time. Why? Because time is money, my friends. Alright, so number one, Home Depot. Um, they offer dividends. They have a dividend safety score of 87, which is very safe. You could use Simply Safe Dividends. To see that, you could start a free trial and you could take a look at different stocks, which I would definitely recommend. They have a incredible 5-year dividend growth rate, not just 5-year, but also 20-year and 10-year. They have been growing in the 20s, 20%, over 20% dividend growth year over year for the past 20 plus years, which is it's ridiculous. It's incredible. They have outperformed the S&P 500 by a long shot. And their share price has also been going up. This is just a chart of the past 5 years, 163%. It's practically like a growth stock. If you were to only look at this, you would assume it's just a growth stock that they're reinvesting all of their money into the company. But they're not. They're paying out very generous dividends. So why? Why do I recommend this stock? One is because it offers a rapidly growing and a safe dividend, as you can see with that 87 safety score. Has growing earnings per share, as you could see on the chart on the right. This is quarterly growth, and it's been growing slowly but consistently for most of the quarters. What else? We could see that they have a nice rising stock price due to growing earnings per share, growing sales, and third point, and probably the most important, is that it has a COVID proof business model. So what does that mean? That means that even if we were to see a resurgence or a second wave, their sales have actually been boosted because people are doing a lot of more DIY projects and are actually taking the time to do what they didn't do before around their house. And as a side note, some people like stocks, others like real estate, some do both. But as long as people are buying real estate, which is an investment, and trying to fix it up, they'll always need a place to get all their raw materials, such as Home Depot or Lowe's, which is also a good buy. So they definitely won't go anywhere. Real estate is and will always be a timeless and good investment. So stock number two, NextEra Energy. So this is the world's largest generator of wind and solar energy, and honestly, it is the future. Um, for a utilities company, it's incredible that they are starting to provide this. So they have a very nice dividend growth, 12% last year within the last 5 years, 13% last 20 years, 9%. So it is not as high as Home Depot, but it is safer. It's a lot safer. They're expanding, they're growing, not just in Florida where they're based out of, and most of their business takes place in, but also outside of the United States. I'm sorry, outside of Florida, in other states. So we could see this very healthy trend line in dividend growth, and um, in stock price appreciation. There is even more stock price appreciation than Home Depot, an average of 34% return within the last 5 years, which is incredible. Also seems like a growth stock, outperforming the S&P by a long shot. And something that's very nice about this stock, it offers a very healthy and growing dividend, and it has a really nice starting yield, as you can see, 2%. That is incredible for a leader in its field, because this is the future, in my opinion, of renewable energy, and especially for utilities. It is the future, and it will only continue to gobble up more market share. Okay, so why this stock? It's a leader in its industry. It offers massive growth potential, and the company expects to double renewable capacity within the next decade. So they could double their capacity to distribute within the next 10 years, and that should just drastically help with their top and bottom lines. Just in profits, which will be incredible, and that will be we will see that reflective in the stock price, and that dividend growth should definitely remain safe. That's why it has a 99 dividend safety score, which is they aren't too common. So it offers safety and a predictable and growing dividends to shareholders. So it's very safe. The dividend growth is a little bit more conservative, but still on the higher side. And it's it's renewable energy. So honestly, this industry will just continue going through the roof. Anything with renewable resources, as oil continues to do bad and will likely to continue to do bad in the future as we, as a culture and as a society, start moving away from oil. This will just continue to move parabolically, honestly, just straight up. That is very unprofessional, straight up, but I really do think up and to the right is where I see this and this industry overall. Okay, and the third stock is AbbVie. So I do own both AbbVie and Home Depot. I want to start position in NEE, but AbbVie, I read their quarter three their financial statement, and they performed really well. Yes, Humira loses patent protection in the United States in 2023, but with the Allergen acquisition, I do believe it'll diversify and increase their streams of income, according to me. They have a very nice starting dividend yield of 5%, which is incredible because I do think they have a lot of upside potential. Why? Because, for example, Botox right now, Botox is probably going to do bad in the short term, and their allergen acquisition won't be reflected, and the results won't be shown until I believe at least possibly next quarter or 2 quarters out. So that will take effect as the acquisition will be noticed when they report earnings. But the 5-year dividend growth rate it's incredible, 22.3%. It's just like Home Depot. It's it's really nice. They have a short track record, but that's because they spun off from Abbott Labs. So I would definitely expect continue to expect good things. And as they said I'm citing this directly from the financial statement. The Allergen acquisition also provides a robust portfolio of on-market and pipeline assets that position the company for enhanced long-term growth potential, a growing dividend, rapid debt repayment, and investment innovation in each of its therapeutic categories. So I do believe that they must have studied and taken note of the effect that the Allergen acquisition would make. And it seems like they are very, very confident in their their purchase and their decision to make that purchase. So I fully back them, and I do think that the diversification and the allergen acquisition is definitely not priced in um, to the stock price yet. So these are the three stocks. I wanted to make a quick video. Might have rambled on a little bit. Sorry about that. But AbbVie, NextAir Energy, and Home Depot, they should definitely provide you with some stable income, stable dividends, and rapidly increasing dividends. So it was nice to provide you guys with this info. It was nice making these charts and taking these notes. So stay tuned and subscribe for more.